if you're in the market for a newly constructed home, there is some encouraging data out this morning. Construction of new U.S. home sales did rebound in September, up just about 7%. Now, this comes after a 1.5% decline in August. Building permits, though, that dropped just about 4%, signaling a drop of future construction. So what does this mean then for the future of the housing market here in the U.S.? Lawrence Yoon is the National Association of Realtors chief economist. Lawrence, it's good to see you. So when you take into account what we're seeing in terms of housing starts, exactly what's needed on the demand side and the supply side, what does that then tell us about what the housing market, what that landscape will look like over the next several months?
Well, it's certainly a good news that more supply is being provided by home builders on the single-family housing starts. We saw the apartment construction actually decline somewhat. Maybe people are concerned about oversupply, but for the ownership market, the single-family housing start this year, there could be actually more new home sales compared to last year based on the trending condition, even though existing home sales are down by 20% due to the lack of inventory. But the builders don't have constraints on inventory. They just build it and create that inventory. So clearly implying that there are demand out there. People want to see more choices, more inventory, and people are responding to that.
What's the likelihood that they'll see that anytime soon, Lawrence?
Well, the momentum is good. So it's an incremental growth, but we really need to see a big increase in inventory. Currently, we have only 1 million homes on the market. Pre-COVID 2019, we had 2 million homes on the market. So essentially doubling in the inventory is required, which is the reason our organization is talking with Congress to say, can we provide some tax credit for mom and pop real estate investors, small time, who are holding maybe 5 properties, to say, unload 1 or 2 of those property onto the market, sell it to the first-time buyer, and one will get some tax credit. So trying to provide some incentive to bring more supply onto the market.
Lawrence, when we talk about what the level of mortgage rates should fall to or need to fall to in order to spur some of that activity, are we talking below 6%? Because ever since we've gotten near these 8% numbers, we certainly have seen a further freeze of some of the activity in the market.
Yeah, Federal Reserve is clearly overdoing the rate hike. I mean, they are breaking clearly on the commercial real estate side, but on the residential side, the affordability, the monthly payment to buy a medium-priced home by middle-income person has essentially doubled from pre-COVID to today. I mean, this is taking away the American dream, the dream of ownership opportunity. So we need to assure that mortgage rate trends downward, and that can only happen if the Fed essentially say, we will stop raising rates, and once the inflation is clearly under 3%, we will start cutting interest rate. So I think that trending, will begin to occur in early spring of next year, but I hope the Fed begins to make those announcements.
What type of new inventory, and we've kind of focused in on where there's inventory coming on the market from the existing side, but what about on the new inventory side, where you've got fresh build-outs or even an order backlog that many of the larger home builders here in the U.S. are trying to work through, even in the face of some of the orders that are kind of off of the levels that they had seen last year in a more favorable environment, as it may have been, and as it was, even though rates were still in the Fed's kind of rising and at the early side of their rising policy?
One interesting trend line that I'm seeing is that the housing start is the beginning, but when does it finish? Usually it takes about 6 or 7 months. That's the usual time length. But what we are finding now is 9 to 12 months, clearly implying that there could be some regulatory barriers at the local level. We need to remove any barrier that hinder the construction activity because we need more supply coming onto the market. And we should also consider, training Americans to go into construction industry, repair things, make things, rather than go to university, because we may have too many people going to university and not enough going to trade school, because lack of construction workers is also hindering some of the supply factors.
Lawrence, you've been covering the housing market now for some time. Just what's your assessment of what's going on today, how unusual these dynamics are that are at play? When you talk about the fact that we've seen a massive surge in mortgage rates, yet we haven't seen any relief, much relief in home prices, given the fact that there's simply just no supply.
Yeah, so lack of supply is driving the prices. So multiple offers still happening, perhaps not as intense as what occurred, say, 1 year ago or 2 years ago, but it's still happening in the marketplace due to the lack of supply. We did see some price decline out in the West region, Rocky Mountain State, California, state of Washington. But once the prices declined somewhat, there was a rush of buyers coming in. So right now we are seeing across all four major regions and across the country, South, Midwest, West, Northeast region, prices are rising. So this is clearly implying demand is out there. We just need more supply, even though mortgage rates are high.
And then just the average bidding that's going into this as well, Lawrence. How prepared should people be for the amount of bidding that they need to do and perhaps a percentage increase on top of what they're even offering?
First, you are absolutely correct. From consumers' perspective, it's not an easy market. First, people who still qualify for a mortgage, because at higher interest rate is a shrinking pool of eligible buyers. But due to the limited supply, one has to be ready. Get that mortgage pre-approval. Perhaps do some home inspection with personal eyes rather than trying to put that into a contingency, because as a home sellers, they don't like those contingencies and they will go with someone who are saying, okay, anyone who bypasses appraisal contingencies, home inspection contingencies, it makes the offer more attractive. So something to consider, even though there are some little risk there, but given that there are so many buyers out there, one has to be ready.
All right, Lawrence, always great to get your insight there on housing. National Association of Realtors Chief Economist. Thanks.
Thank you.